The number one investment theme in history is human progress. Investing is having a financial involvement in that human progress. Our society would be so much better, fairer, wealthier, more creative and innovative if more people would believe in investment, learn about investment and do investment. The big missing link for kind of happiness and contentment is that most people never learn about finance. The stock market don't care what your background is, what your education level is. They just care that you know enough and you do it. People ask me like, how do you get from like here to there? My answer is always baby steps. Getting 1% better a month. If you do that financially, you'll be a millionaire, like almost no matter how little you start with. And today, like everyone's going to live to 100. Most people your age, my age, are going to live to 100. And if you want to stop working and have a good life from 55 to 100, you've got to have sorted this stuff out because the government simply cannot afford. There's a mathematical inevitability that you can't have tens of millions of people wanting to live for 45 years and have everything funded by the government. It's not that much of a sacrifice. It's like 10% of your income every month. If you're on an average British salary and you can say invest 10% a month of your income and you make stock market returns, which is roughly 10%, you'll have £1 million.
You're not defined by where you come from.
Yeah.
And I think that's a big message that I always want to tell people.
Like you have to be able to be uncomfortable.
Yeah.
Like be comfortable with being uncomfortable.
When you grow up in ends, you don't realize it when you're confident, but you have an audacity to do things that ordinarily most people wouldn't be willing to do.
Welcome back to another episode of the podcast. I've got a special guest in the building. We have Andrew today, who is a best-selling author and financial educator of 12 years, and he's worked in the city since the late 90s. How are you doing today, Andrew?
Really good and really honoured to be here. It's really
Thank
cool.
you.
I
It's
really
great that
appreciate
you're
the
saying
invite.
that honour, because
No,
I'm
it's
very
cool.
honoured to have you here
I've
too.
watched a fair few of your podcasts, genuinely, in the last few days, just because that's what I do when somebody invites me on, and there's some really good quality stuff. So yeah, I hope I can live up to lots of your other guests.
Thank you. I want to give the guests a bit of a background, because actually your book, How to Earn the World, I don't know if you can actually see this on camera. So this actually changed my perception on personal finance and investing. This is what really got me to understand how to think about investing from a diversification point of view, and how to think of it a bit more globally.
Big picture.
And also, exactly. And also have a better understanding of inflation as well, and why we, invest. So I'm really excited about the conversation today. So who is Andrew? Obviously, I gave, a bit of a description from my point of view, but from your point of view, who's Andrew?
Yeah, well, I love that, but I've noticed that you always start with your guests on that, which is kind of cool. And it's that, you on the one hand, you have the risk that my wife will tell you I can't answer a question in less than like 20 minutes, right? So I'll go, I did this and I'm from here, and go on forever. But set against that, I guess it is quite instructive to know what people's personal journey is, and I guess that's why you asked that question. But so my dad was from Northern Ireland and my mum was half English and half Kiwi, and I think that actually matters, because even though I grew up in the south of England and I sound like I do, right, and actually having a Northern Irish dad and Northern Irish grandparents just makes you a bit different culturally, like this sort of Northern Irish Protestant Presbyterian work ethic and frugality and a focus on putting by, and not like my grandfather had his own business but always drove like really cheap cars and not really flash cars, which is in stark contrast to all the parents of the kids I went to school with. So even though I sound a certain way and I'm from a certain background, and because my dad worked for a big multinational company, and then we lived in southwest London for when we were in the UK, but my dad for a lot of my childhood was in like Kenya, Argentina, Australia. So I actually had a really aggressively strong Australian accent when I was like 5.
Seriously?
Yeah. Like, hi, how you going, mate? When I went to my school back in England, all the other kids were like, you're a bit weird, because it was like pre-neighbours and stuff. But I think just culturally, that's really important in terms of my background and how I developed, because having lived abroad for so many years, and then because my dad worked so I guess the key bit in terms of career, and I'm very blessed and very lucky, but because the big company my dad worked for, basically, this was back in the days where if you were an expatriate living in Kenya, or we lived in Amman in Jordan during the first Gulf War, which was fairly interesting, the company paid for our school fees to go to a boarding school in England. Wow. And there's no way. So me and my brother and sister all went to very expensive, private boarding schools, and there's no way my dad could have afforded that if he wasn't working with that expat package, which doesn't really happen anymore, because now Shell Kenya is run by somebody Kenyan, not somebody from London. The world's moved on. Yeah. But so that's what meant that I went to a school where I got a great education, and all the sport and all the music and and everything else. and then did economics at uni, a pretty logical trajectory. I think I probably watched some 1980s, Wall Street or whatever, and thought, oh, I'm going to go and work in the city. Wasn't much more cerebral than that, other than the fact that I really liked, I was genuinely interested in kind of economics and politics. And it's funny, I managed to get a job with Swiss Bank in 1998.
Oh, wow.
Yeah, it was pretty. There's a story behind how that happened, but yeah, it was, it was an amazing result. It was like, wow, I'm really lucky to have done that. And I reckon, this doesn't happen anymore, and I feel a bit self-conscious admitting this, but I arrived on the trading floor at Swiss Bank, SVC Warburg, basically not knowing anything about capital markets. And then they had like a mini MBA, I think, called a graduate training program. They trained you up. Whereas now, if you're a 22-year-old and you want to get a job at like Goldman Sachs or JP Morgan or any of these banks, you have to know everything.
You have to know a lot. Yeah. You have to have a really good degree, probably first class, maybe high, upper 2-1.
It was still very competitive. There were still like hundreds of applicants per job. And just so I got a 2-1 in economics from Birmingham University, which was kind of enough to apply to accountants and the government, all the jobs that I kind of wanted to apply to. You had half a shot, but in the summer after university, I did an internship in Washington D.C, which I literally sent off like hundreds of letters to get, and I've got one of 12 places where since like 1919, 12 Americans come to Westminster and 12 Brits go to Washington. And you just get parachuted into a congressional office and you write speeches for the congressman and you run around the Pentagon. And it was nuts. And
that's such an interesting experience.
And you know what? It bumped me up from being like half, quite a slim chance of getting a job at somewhere like Swiss Bank to being front of the queue in the interview, because everybody there was like, how did you do that? How did you get this thing? And so I guess the reason I wanted to mention that is because I guess this is maybe more for a very young audience, and your audience is probably a bit older and more sophisticated. But whenever I speak to universities or schools, quite often people ask me like, how do you get from like here to there? Like almost no matter what your background, what's the secret sauce to get? And my answer is always baby steps. Like if you're starting at A and B or Z or whatever is a very, very ambitious thing, I would never have got a job at Swiss Bank if I hadn't spent the previous summer poring over folders at my university trying to figure out like how to get an internship somewhere that would get me in the door at places like that. And you've got to just do that. You can't just go, whatever your dream is, you can't just do something today that means that happens tomorrow. It's going to take a long time. Anyway.
I like that. Wow. That's amazing. You had such interesting experience. So did you grow up in Kenya?
So my parents lived in Nairobi when I was at uni.
Okay.
Which was amazing because basically every Christmas I went back to Nairobi and it's like the best time of year in Kenya. Wow. It was amazing weather and stuff. So, and then I'd come back in January to Birmingham. Can you imagine you'd leave like the Maasai or, the sea and then fly back in January to Birmingham. It's like, oh man, I wish I was still in Kenya. But but I only literally went there for a few weeks a year because I was already at university and doing stuff like summer internships and whatever. But and then 4 years in Amman in Jordan during the first Gulf War, which was me and my brother had a few interesting experiences in downtown Amman as kids that people thought were American. So a lot of running and getting in taxis and getting out of there quickly and stuff like that. Yeah.
That sounds intense.
Yeah, but great,
Yeah, I mean for you, I guess it's a bit of adrenaline and fun.
But I like, I think the curse of having that life as a kid and a teenager and stuff is, I do struggle a bit with the UK, like January, February, March. When like the smell of the spices and the hot weather and it does give you this kind of bug that you never get rid of just wanting to be. Somewhere slightly more exciting than like, You're
trying to say the UK is boring.
A British high street on a February afternoon going to IKEA.
And grey,
Anyway, I feel like we probably need to talk about financial markets and stuff. Sorry.
No, I want to know a little bit more. So where would you say the majority of your life you grew up in?
London. Southwest London.
Okay.
I grew up in Australia till I was 5. Came back in the early 80s. Got bullied for having a weird accent. Went to a state school, then I went to a really posh public school. Got bullied for being for having a state school accent. And it's interesting trajectory. But from we were in London basically from when I was 5 to when I was about 13 in Southwest London. So I'm definitely a Londoner.
Yeah, amazing.
I was just saying, I live in Hampshire now. I miss London. Like every time I come into London, I'm like, I think I actually want to live in London. Don't tell my wife.
I mean, London's expensive,
Yeah.
and I think we'll definitely talk a little bit about, like, you know, obviously
Cost of
inflation
living
and cost of
yeah.
living and stuff like that. It's your story is so fascinating. The fact that you know jump from place to place, I think that is very, very interesting. I guess, what did you feel like you learned, obviously, from your dad? Because obviously he was going from place to place, not just, you know, professionally, but personally, and obviously from a finance point
But
of
that's
view
like
as well.
Northern Irish, like it's sort of Scots, Northern Irish, Ulster Irish, Presbyterian, puritanical relationship to money and reading and stuff, and I'm eternally grateful for it. I mean, like, my dad's probably watched a few of my podcasts, and he probably hates the fact that I can keep saying, like, when I was about 9, he used to make me read The Economist. Like, he'd go, right,
Seriously? Wow.
it's time to read and I'd be like, oh, really? We've got to read The Economist? I'm only 9. Can I go and play with my Atari, or, you know, go and play football with my brother or whatever? But you know, actually, joking aside, I did find that really boring and really hard when I was little, and then, but relatively quickly it started getting interesting, and pieces started falling into place. And so I guess, you know, my ability to write books and stuff is because everything in life's exponential. This goes to the baby steps point. So if you start reading books about economics when you're like 12 or 13, you've got a 10-year advantage on people who don't start reading them until they're 22 or 23. Like, genuinely, like, I was reading Adam Smith and, you know, like the great philosophers and stuff in my mid to late teens, partly because of school, but partly just because of that interest engendered by my dad, which meant when I was then looking at this stuff at university and like Econ 101, I wasn't like getting a reading list and going, what's all this? I don't know what this stuff is. I was like, well, actually, I've read quite a lot of that already. Wow. And so if you think about that over many years, that, you know, the aggregate number of books, this sounds really pretentious, but I'm such a big reader. Like, I often get asked by, when I'm doing speaking events, you know, what's, you know, getting 1% better a month, right? If you do that financially, you'll be a millionaire. Like, almost no matter how little you start with, and we can talk about that. It's one of the fundamental ideas in my book. But if you get 1% better, not necessarily just financially, but like at everything, like health and fitness, and, you know, the dividends that will pay for your life, you won't notice it between sort of the age of 20 and 30, but you'll notice by the time you're 50 or 60, you'll be in a very different place to somebody who doesn't get 1% better every month. And it's like, what's the most tangible way of doing that? Because it's hard. You know, you pass some exams when you're in your 20s, or the two most tangible ways of doing that are to invest, because it will give you the maximum chance of you know, if you get 1% better every month investing, you're doing very well and you're very clever. But if you get anywhere sort of vaguely in that direction, that's completely life-changing, which we can come on to. Like, no matter whether you're on an average British salary, and obviously the more you earn, the easier it is to leverage that reality. But if you're reading a fair bit, and I've seen some of your podcast guests and, you know, recent guests you've had on making that point, saying like, that basically they believe you can change, you know, you can change anything, and you can learn anything, and you can improve any skill. And I think books are, you know, in an era of short form content and Twitter and Instagram and everything, and TikTok and everything else, I think one of the tragedies is that we've lost sight of long form content.
Fair,
and it's really like, you know, people waste a lot of time bleating about horrible things that are happening in the news every day, which actually gives you nothing. It's not going to improve your life.
That's true. It doesn't.
It doesn't. Like, so if you look at everything through the prism of how do I lead the best life for me and my loved ones and my family and my friends, and do the things I dreamt of doing, and you know, just step away from all of that stuff. Because I mean, this is just my view, right? But it's tragic what's happening in Israel and Yemen and Ukraine, but every single year throughout the whole of human history, since we had the news, that's happening somewhere in some shape or form. And actually, in terms of the aggregate, you know, the aggregate loss of human life and misery right now, even with, you know, Ukraine, Israel, Yemen, everywhere else, is still nothing compared to Vietnam, Korea, the Second World War. You know, your chances of living a relatively peaceful, unencumbered life today are about the best they've ever been.
That's true.
Like, your average person today on social media getting really riled up about it is angrier about it than people in the late 30s when Hitler was actually doing all the things that Hitler was doing, right? You know, because we live in this sort of fast, short form content, you know, Twitter's TikTok culture, where everyone likes to sort of rant about it. And we're slightly going down a rabbit hole, but I guess just the point I want to make is it actually, one of the most unselfish things you can do, which goes back to the economist Adam Smith, like, is take care of you and yours, because to do good, you must first do well. Yeah. And I'm a big believer in that. Like, you know, if you get yourself sorted and you get your family sorted and you look after your dependents and you pay tax and you contribute to your, which by sorting yourself out, you can achieve, you're likely to have a much, much more positive impact on the world, right? Than sort of not doing all of that, but spending the whole time being angry. Which is just my view, right?
That's a fair point.
You know, we have to be aware of bad stuff happening in the world, and there is bad stuff happening in the world. But I guess my point is, like, do that after you've invested the time and effort in, like, learning about financial markets, learning about whatever it is that makes you tick and you think will help you reach your kind of goals.
Yeah. That's a fair point. I do understand what you're saying. It's true. I think that I had a guest on the podcast recently, and it was a question around, you know, like, how do you kind of not like embed yourself in the negativity that we are.
Yeah.
It's just said, I just don't watch the news.
Yeah,
which
exactly.
Is true. I
it's
just don't watch it.
I call it news hygiene.
Yeah.
It's like this really crazy assumption that, so, I mean, I've written about this quite a bit over the years, but like Elon Musk's quote is, the news answers the question, what is the worst thing that happened in the world today, every day? And it's like, actually 99.9 recurring % of the hours spent by humanity yesterday was probably neutral to good or mildly negative to good. Like mothers taking their kids to the playground, or, you know, us today doing this, or, you know, most of human experience, even in Mogadishu or Baghdad, or, you know, obviously probably not in Gaza right now for obvious reasons, but even in places that were recently quite challenged, human life goes on, and human life is mainly good. Like people care about each other, people love each other. But we choose, but the news, which is quite a Western developed world thing, more. I mean, obviously it's infiltrated the rest of the world too, but it all came from Britain and the States and Reuters and the Times and whatever, you know. As with a lot of bad things, we led the charge on the development of these things. But you know, so coming home in the evening, choosing to sit down, put the TV on, and watch someone in a dark suit spend half an hour telling you all of the really bad things that happen in the world today.
Yeah.
What utility has that got for your life? None. And it's actually got massive negative. It's hugely negative because it makes you feel. It means that most people's idea of the world is factually completely incorrect and distorted. Because if your idea of the world is the 0.001% of terrible things, war, famine, disease, COVID, government dishonesty, you know, scandals, whatever, if you're filling your consciousness with that every day, you think that's what the world's like, but actually 99.999% of what's going on in the world is people playing football or going on holiday or going to a sports match or hanging out with their mates in a bar, or, you know, and truly, like, or going to school, whatever you like, you know, and seeing your mates. And we don't, you know, and again, I'm slightly conscious of going, this is a very red herring interview, which is not your fault. I'm just rambling on about whatever, but I guess, well, if I can, you know, I'll sort of just come back to capital markets. Like, you know, I genuinely think that most people's problems, this is why I'm hugely mission driven about what we do. My business is called Plain English Finance, right? Because the big missing link for kind of happiness and contentment is that most people never learn about finance. And they don't understand, and they have completely incorrect, like 60% of British adults don't understand what compounding is. Yeah. Compounding is what will turn £5,000 into £1 million over 55 years. Like, basically, if a wealthy grandmother or whatever, if you can put £5,000 in an investment account, like an ISA, tax-free investment account, and I appreciate not many people can do that, but it's the maths are just to illustrate the point kind of aggressively. And you return, so that the US stock markets return 10.42% from January 23 to December 1923, like for 100 years, right? To December 2023, 10.4%. If you return 10% a year on average on £5,000 between the day a child is born and the day a child turns 55, you'll have 945 grand. Yeah. Now you have to think about inflation. People are, oh, that's really misleading. It's like, I'm not advocating that's what people should do and that solves the problem. What I'm advocating is that should just show you that it's worth learning about finance. Yeah. And it's worth, you know, as soon as you start making any money, like this idea that the capital markets and the stock market is for rich people gets correlation and causality the wrong way around. Yeah. It's like, oh, that's for rich people. No. It's that the people who learn about that stuff are much more likely to be rich. And like,
I get what you mean. Yes,
right?
Yes.
So
yes,
like,
yeah.
the stock market, capital markets don't care what your background is, what your education level is. They just care that you know enough and you do it. And crucially, you do it over many, many years, because that's the big, I think the big, good, solid people like the Rothschilds family, right? Famously, immensely wealthy, Oxford and Cambridge, Harvard and Yale. They've been doing this since the 1800s. And that's why they're so super normally wealthy, right? It's actually not because they're like nefarious lizard people who are, puppeting the world, which is just nonsense, by the way. It's because, the Rothschilds they owned 3 or 4 investment banks in Europe in the Napoleonic Wars, right? So they've been compounding returns in multi-asset from then until now. So they're very wealthy because it's just how the maths works, right? Yeah. And so if you have grandparents who in the 50s or 60s were investing, and then you have your parents from in the 70s or 80s were investing, and now I'm investing, notwithstanding the fact that inheritance tax is massive, over many, many years, the maths is just, even if you compound at just like basic rates of stock market return, you create a lot of wealth. Yeah. And the other thing I just wanted to add to that, because it's really important for people to understand, and I think it's really poorly understood, is it's not a zero-sum game. There's a difference between investing and trading. The reason that US shares have delivered 10% a year for a century on average is not because the people who've been investing in shares are like ripping the face off the people who aren't investing in shares. It's because a century ago, there were no iPhones, there were hardly any airplanes, there were hardly any ships, there were no shipping containers. That technology was only developed in the 50s. There was no silicon chips. There were no skyscrapers in Shanghai, right? What I'm all about is investing, and investing is investing in the real world. Yeah. Like the number one investment theme in history is human progress, like population growth, and more happily, because population growth is going to top out and reasonably soon, by the way, and start going backwards, which is another discussion philosophically, but which not many people believe, but that's clearly what's going to happen. But what that will hopefully mean is we have a slightly lower population globally, gradually over time, not because of war or famine or whatever, just naturally and iteratively, of far wealthier people. And when people are looking at us, that's nonsense. Like the world's getting worse and it's rubbish. No, like go to London in 1850. If we were literally half a mile up the road in 1850, think about the population of London was 3 million. It was squalor, cholera, diphtheria, typhoid. People were dying in the streets. Life expectancy was like 42. People didn't have any teeth. So like it was awful.
And the wealth gap probably was huge. Do you think it was bigger then?
That's a difficult one. It probably was, but there's definitely the wealth gap's been going the wrong way for 30 or 40 years. But I would contend that's because of too much government involvement.
Yes. Okay. Yeah.
Right. It's the opposite of what most people think. Right. Because we can come on to it, like, why do we have a cost of living crisis? Because of QE. And basically because the government over the last 40 or 50 years has destroyed the equity culture of this country through a whole bunch of really, really bad decisions about regulation and tax. Most people don't invest. Like more than 90% of British adults don't have a stocks and shares ISA. More than 90%. Yeah. So that's terrible for them as individuals because they can't benefit from all this stuff I'm talking about. Yeah. And it's terrible for our society more broadly because I've just spent 8 years trying to raise money for biotech companies. It's almost impossible to do that in Britain, and all our best companies going to America.
Yeah, because
because nobody's investing, and anybody under the age of 45 is investing in crypto. And the trouble with like whether or not, I'm not going to make a call on whether Bitcoin's good or bad or whatever. What I can tell you is that every £1 billion that's gone into crypto in the last 10 years has not gone into companies that are trying to cure cancer or build hospitals or develop a new software program or open a chain of restaurants or build a football stadium. It's gone into crypto, which doesn't produce any of those things. Yeah. And which is why I'm like, I do have, like, I think Bitcoin's really interesting. I think blockchain's really interesting, but I have a massive problem with the fact that this generation's the first generation that isn't supporting real companies in the real economy doing stuff. That has challenged wealth creation in this country. That is why the government's had to ride in on a white horse, supercharged by coronavirus, and just invent £500 billion out of thin air. That is why we have a cost of living crisis. And now everybody wants more government support to try and solve that problem, which will produce 180 degrees the opposite and give us an even higher rate of inflation. Yeah. But I think, ironically, I was at the London Stock Exchange on Tuesday evening and there was a lot of chat about this. So Labour are making some very interesting noises about the city and tax levels and innovation and growth and stuff. And, the nasty Tories probably couldn't get through some of the policies that will make Britain fairer and wealthier because it's seen as like privileging the rich, right? And the nasty Tories just can't do that electorally because they're the nasty Tories. Whereas Labour can kind of do it on the sly.
Okay.
So it's going to sort of ironic. It's a bit like when Tony Blair came in 1997.
Yeah.
It'd be ironic that Labour will probably be more Tory than the Tories.
Yeah.
but most 99% of people genuinely don't understand tax regimes or capital gains or how the stock market works or how businesses in London raise money on the London Stock Exchange, or more aptly aren't and haven't been for the last 15 years. Like the London Stock Exchange lost half of its companies since 2007.
I did not know that.
Not many people do.
Yeah.
Right. And that's because, as I say, more than 90% of British adults don't invest. So I guess like you can tell I get on my soapbox about this stuff, but you know, our society would be so much better, fairer, wealthier, more creative and innovative if more people would believe in investment, learn about investment and do investment. Let's say there's 50 million British adults. 5 million of them are probably never going to be able to invest in an ISA. They're super economically challenged, and I acknowledge that. You know, we won't get into the reasons for that, how that should be supported, that's different. But just call it that. 5 million of them are extremely wealthy, and they're all fine. They're basically the 5 million who have a stocks and shares ISA and everything else sorted. And my crusade is that 40 million in the middle. Yeah. Where like actually quite a few million of those people, if they understood this stuff, if they learned about finance, they learned about stock market, if they really understood compounding, could absolutely sort their lives out. And it would make a much better society for Britain. We wouldn't need to print money out of thin air and create inflation. With the only caveat being, which is a big caveat, is getting this right takes 20 to 40 years. And that's where it all falls down. Yeah. But that's where people, you know, people with discipline who see the long game, who believe it, who look at the data, who understand the lessons of economic history and put a little bit of money in every month into stock market investment from the minute they start earning some money in their 20s until they're in their, let's say, 40s. Because what I always say is if you start with 25 quid a month, let's say you got a bar job, you're 23, you've just moved to London or whatever. I know that somebody like that's not going to be, because I was like that. I was working in a bar at university. I couldn't put 200 quid a month into an ISA. But if you put 20 quid a month or 25 quid a month, what happens is you see what happens. Like, and when you're 27 and you've got a slightly better job that's slightly higher paying, you go, well, that's worked for 5 years. I'm going to put 50 quid a month in now. And when you're 32 and you're now sales director or whatever, and you're earning a bit more, you just build this infrastructure of like investing automatically by direct debit every month into human progress, which is basically shares, right? And if you do that, you build and build and build, and you will have way more money than most people believe is possible. Yeah. Like by the time you're in your mid-30s, you know, then you've got a deposit for a house, all this sort of stuff. But you've got to have confidence. You've got to play the long game, and you've got to not, which is part of the discussion I was having on Tuesday evening at the stock exchange with some of the people from the FCA, the financial regulator. The problem is this is very boring to most people. Boring. Like get rich slow, get rich long. Yeah. But it's got a very high probability of working. Yeah. Whereas what most people want to do is trade FX and trade crypto and get in crypto groups and hear about their mate who got a Lamborghini because he turned 300 quid into $1 million. Sexier. Right? But it's sexier, but it's really low probability. So it's like, I've had this conversation with a lot of people, like everyone says crypto, you know, blockchain's the future, Web 3.0, whatever. It might well be, right? But I was on the Swiss bank equity sales desk in the late 90s when .com was happening and the internet, and we floated lastminute.com and everyone was like, the internet's going to be massive. And I'm like, well, yeah. But okay, let's say you were confident the internet was going to be massive. Would you have bought Excite or Lycos or America Online or Google? Because Google's the only one that's still a really big company, and all the others you've probably lost 90% of your money. Are you going to invest in Nokia because it's the best mobile phone company in the world and it's just been in the Matrix movies? Probably, without realizing that, you know, a decade later, Nokia would have fallen 90% and Apple would be the biggest mobile phone manufacturer in the world, right? Yeah. Just because a new technology is going to change the world doesn't mean that 90% of the investments within it are going to go to zero or near zero. And that's the point. I think a lot of people investing in crypto now just don't get that. Yeah. So anyway, well, that was like I told you that was like a half-hour answer.
No, it's okay. No, I'm so happy that you brought up several points, and the fact that this is why I want to go into. And I think people are tuning into this. They are interested in investing. They are interested in learning more. And you know, I share your passion where where we do need this financial literacy, I think obviously we haven't been taught it. I think actually where I would like to begin kind of, I guess, in my statement is that first, I think people are just not really aware of this stuff, so they don't even really know it's a problem.
Most people don't know that. Most people think that an ISA is a type of investment,
exactly.
rather than just a tax shield account into which you can put one of tens of thousands of different investments. Or most people think a pension is just like a pension that your company kind of sorts out for you, but they don't know what goes in the pension.
They don't know nothing about it. Yeah, I didn't, and that's why I'm saying, because I know that point of view, and I know that I've transitioned from somebody that didn't know that stuff to somebody who learned,
and the scales fall from your eyes. It's like this stuff really is life changing. Like it just is. And one of the things. So sorry to interrupt you, but I just want to get a story out really quickly. So I have this YouTube channel. We only kicked off in November, and I made this point that like the £1,000 television that a 25-year-old puts on a credit card today, at the rate of return from the S&P 500 in the last century, if that £1,000 had been in tax sheltered investment accounts, could have turned into 63 grand by the time they were 65. That's the power of compound. That £1 grand TV at 10.4% over 40 years from that they spent at 25 would be 63 grand at 65. Why is anybody impoverished in retirement? Nobody should be, right? And then somebody came on and said, oh, you're another one of these bloody people online saying get rich slow, like, you know, I should sacrifice at 25 so that some old bloke can, you know, have a better life. And it's like, okay, look at it another way, because this is the more important way of looking at it. If you don't do this, you're going to be really poor. Like that is the bigger, like if you like this, the carrot, the stick is more powerful than the carrot. And I know that, I think it was Godfrey, one of your former podcasts, was talking about how the government, like in the UK pension system was created in 1909 for anybody who lived past the age of 70. Life expectancy was 47 because everybody worked down a mine or building ships or whatever, and most people died. And most people, so for the very small number of people who made it to 70, it was amazing. It was like this new thing called a pension that we and the Germans invented in like 1909. The Germans were a couple of years ahead of us, but basically it was a British thing. And so it's an amazing thing called a pension. It's wonderful for, you know, somebody old who's hit 70. And today, like, everyone's going to live to 100. Like most people your age, my age, are going to live to 100. And if you want to stop working and have a good life from 55 to 100, you've got to have sorted this stuff out, because the government simply cannot afford. It doesn't matter whether Labour, the Tories, you know, or the Communist Party come in, like, there's a mathematical inevitability that you can't have tens of millions of people wanting to live for 45 years and have everything funded by the government. It's just not possible, right? And so that's why it's never been more important than it is now to figure this stuff out. So it's not that much of a sacrifice. It's really not. It's like 10% of your income every month. Just calibrate your life. Figure out how to spend 90% of what you earn. That's the lovely way of doing it. Don't go, oh, how am I going to save 10%? Go, right, what do I earn every month? How do I spend 90% of that in a way that I love? On all the stuff I love.
90%,
do that.
Yes,
I'm going to set myself a lovely task this weekend. I'm going to sit down and work out how I want to spend 90% of what I earn to have the happiest and best life possible. And then there's 10% left over for investment. And if you do that for the whole of your adult life, or as best you can, it's life-changing. Anyway, sorry, I just totally...
So I love everything you're saying. So let's break it down. What is actually investment in terms of layman terms from your definition of investment?
So it goes back to the point. So the really important thing is to distinguish it from trading, to me. If you want to understand, so investing is deploying money in certain capital markets, so a little bit of money each month, into real stuff, right? And basically that's equities, which are shares, the stock market, something called bonds, which is a bit more complicated asset class, but it's basically like an interest bearing. It's a bit like a savings account if you invest in bonds. They're linked. Commodities, which most people understand, you know, basically what that is. That's basically oil, gold, silver, even I own some uranium, which has been a really nice performer for the last. And I love the fact that I've got exposure to uranium randomly. And then real estate's the other big one, and cash, right? So I think what most people want to do is they want to know what those things are. They want to have a basic understanding of those things are, which is not that hard. Like what I always go back to with this stuff is learning how, like most people learn how to drive, which takes, how long do you reckon it took you to learn how to drive?
Probably
30 hours? Well, yeah, but
in hours.
total
Ooh.
number of lessons, maybe 21 hour lessons.
Yeah,
or
but
sort of.
between 20 to 30 because of 1 hour a week.
And then you have to learn the not the Green Cross code, the highway code.
You got to do the whole
do the exam.
Yeah, the exam. Yeah. What's it? Not the practical. The other one before the practical.
The theory,
yeah.
and then you have the. So okay, let's agree. It's what 50 hours.
Yeah.
It's an exam and a bunch of driving around and whatever. What percentage of adults in this country can drive? A very high percentage.
Probably high. Yeah.
Right.
Yeah.
I always argue that learning about what I'm talking about right now, like what are the main asset classes, what is a pension, what is an ISA, what is compound interest, what's inflation, what's your interest rate, so that you can drive your finances to give you a life-changing outcome, takes no longer than learning how to drive a car.
I agree.
Right?
I don't think it does.
But nobody does it. And that's the crazy thing. And everyone goes, no, that's just for rich people. Oh, finance, that's really scary. Like, what does equity mean? What, it doesn't mean anything more than that. It's just shares. Like, learn what are shares. All shares are is as it does what it says on the tin, right? It's like a company needs 100 million quid to do something. If you give them a fraction of that, you get a share of the upside if that works out. And then they're originally invented by the Dutch and the British to basically fund sending ships to the New World for spices and whatever else was out there. And it basically even royal families in 1700 couldn't afford to build and equip that number of ships that could be lost at sea. So some clever people in Rotterdam and Amsterdam and London figured out in the coffee houses of the day, why don't we just like have a piece of paper that's, if you put 1,000 ducats in, or guilders or pounds, you have a piece of paper that gives you that share of all the money invested. And that's how it started. It was just just a technology, right? And so this is my point, is by investing, people have such incorrect understanding of what shares and what investing is, right? They think about it as trading. Investing is, over the next century, like my next book's about the biotech sector, because I think the next raft of multi-trillion-dollar companies will be biotech companies, because you create real economic value and wealth by solving human problems. And most of our remaining problems as a species are about biology. So that's curing cancer and dementia and obesity and autism, ADHD, and all the diseases of modernity. It's therapeutic drugs, which biotech can do, but it's also rolling back environmental degradation, like improving agricultural productivity in places like India, where they waste 50% of their crop every year because of bad infrastructure and no cold chain. And so it's these, the sort of, for us to go to the sunny uplands of a lot of the world having an even better life than they do today, as I said earlier, compared to what we did in 1850. Investing is what enables humanity to actually get much better over time. Most people think the world's getting worse over time. It's absolutely not, based on anything that matters. Like, 150 years ago, 99% of people worked subsistence on a farm, right? Like, they were lucky to, like, meat was a treat you got once a week. The world's just night and day different. But so investing is having a financial involvement in that human progress. Trading is trying to buy something on Tuesday and sell it the following Wednesday, which is completely different. And the big problem is, most people, particularly most young people who are following social media channels, don't understand that difference, and they go straight past investing, which has worked for like 200 years since it was invented, to trading, and more often than not, that's they lose money, or they make, because the other thing about, like, a lot of people who do trading, they'll get lucky, or maybe they're quite smart, but more often than they'll get lucky, they'll make loads of money. They'll be like, I've turned $1,000 into $9,000. But if your mentality is that of a trader, you're enormously likely to eventually lose it again. Whereas if you
just keep on trying to flip it.
It's like,
flip it.
it's
like the gambler's mentality.
Exactly.
Like,
and you've never actually learned the real nuts and bolts fundamentals of what investing is. So you never move the money across into the right sort of assets. Do you know who Tony Robbins is?
Yes.
The American, giant bloke who's like, what is he, like a personal development guru? I don't know. So he tells a story about a mate of his who was a property developer who was worth $750 million. And he kept saying to him, look, dude, you're worth $750 million from Las Vegas property. Get some of it into the stock market. Get some of it into gold. Get some of it into property. Don't just, and this guy was, to my mind, so greedy and foolish that even though he had $750 million, it's like to fund his family for the next 100 generations, right? He put it all on, you know, went to the casino again effectively and just basically invested in Vegas property and ended up owing the banks $400 million in the 2008 crash and being bankrupt.
Oh my God.
Never recovered, right? And that, to me, that's just an illustration of what can happen if you have a trading mentality.
Yeah.
If you have an investing mentality, you just gradually build wealth, benefit from compounding, and over 20 years is long enough to go, wow, this is, you know, I can do better holidays, better cars. I feel much better about my life. Keep doing that for another 20 years and you've got a really good chance of having a really big 6 or 7 figure sum.
I love that. It's such a great explanation. So I want to talk a little bit about your book, How to Own the World. What inspired you to write your book, How to Own the World?
So I often say,
How to Own the World,
I was an angry young man.
Okay.
So all the stuff I'm ranting, and basically it's amazing, like even working for Swiss Bank, you know, before I quit, I was in New York actually working for another bank, for a French bank, Crédit Agricole. And I had this, you know, road to Damascus moment where I was like, even people in these investment banks are rubbish at personal finance. Like really, really highly paid corporate finance people, investment bankers, traders, derivative people would go, oh yeah, no, I've never really thought about ISAs or pensions. And it's like,
hilarious.
yeah, I don't really understand. I don't, you know, I think it's a bit less like that today, but 20 years ago, there were so many people on my trading floor who were rubbish at personal finance. And I thought, if they're rubbish at personal finance, what chance does, you know, somebody who isn't in the city, like what chance do they have? And I thought, right, that's it. I reckon I know enough to be angry. You know, I've passed all to angry, useful or whatever is what I meant. Sorry, I'm rambling. And I just wanted to get all this stuff. Like I can't remember who was, you know, Tim Ferriss, the podcast guy. Yeah. He's interviewing some author the other day and he said, like, but you have to write a book when you can't not write the book. And that's what just happened with my biotech book as well. I was like, I just really, really wanted, I had all these notes and thoughts and I was like, I really want to write this. And luckily, it wasn't just my mum giving it 5-star reviews when it was published and it sold a few, which was good.
That's amazing. So what would you say are the main lessons that you want people to take away from your book? So
basically, the investment is for everyone. Okay. It's the most important one. Investment is not for the rich. Investment is something that if you learn enough, and like I said earlier, it's no more than learning how to drive a car. It's just crazy to me that everyone learns how to. It's normal. It's not. If you say to somebody, "Yeah, I've got a driving license," they don't go, "Wow." But if you say to somebody, "I basically understand the stock market and I regularly invest in the stock market," they're like, "Wow." Yeah. You know, it's like that disconnect is crazy. So investing is for everyone. You know, my book's not the only book which would teach you, like, as you know, hopefully a decent chunk of what you need to understand. But it's, you know, it's a British one, which for people, a lot of people, if you look at the Amazon reviews, quite a few people mention the fact that, oh, you know, most investment books are written by Americans for Americans, and I think that's kind of true. Whereas mine is very British focused and talks about British stuff. But be aware, like so many other things in life, like eating well and going to the gym and any other discipline, you know, oriented thing, it's not going to take 1 year. Like, you know, people read my book, get really excited, go, oh, and then they like send me a message on social media going, I've been investing for 4 months and I've lost 62 pounds. It's like, you need to read my book again because you really, really haven't understood. Because the whole point about investing is if you do it regularly every month over many, many years, you have a very, very high chance of making really solid returns. If you do it in a sort of half-assed way for a few months, you probably won't. But it's really important.
Long term, right?
You've got to be long term. It should be automatic. It should be something you do from the minute you can save a little bit of money every month for the rest of your life, every month, as just a complete no argument, no, you know, it just to the extent that you can. You might have really hard times. You might have an expense come up to help a family member or something. That's fine. But if at all possible, you can do it every month, because if you do that, at some time in your 40s or 50s or 60s, depending on how well you do it, how much you earn, how much you put away, you will have enough money to just go, I don't have to work anymore. Like, and by the way, the other thing about when you talk about pensions, what people don't understand, they're just a technology that enable us to live for many years of our life without having to work. That's all it is. That's all a pension is. That's quite exciting, isn't it? Like,
that's very exciting, but people make it seem like it's not.
99.9% of human beings ever born in history in the world worked until they died. unless they were very lucky and they lived in a village community where, you know, the old dude has lost his teeth and is lame, and like everyone clubs around to feed him bread, and you know, and that societies are actually probably much better than that when everybody knew each other locally. You know, societies, the support network was a bit better than a sort of collective, you know, nation state thing where we all pay tax to help somebody who lives 200 miles away from me I'll never meet, right? So you know, that same emotional connection to actually caring in your community. But you know, pensions are this amazing invention that enable you to live for 20, 30, hopefully 40 years without having to work.
Yeah.
But then everyone thinks they're really boring and don't want to know about them. It's like
it's just a lack of education. And I think again, with, you know, with the podcast and conversations like this, hopefully we can make it a bit more accessible for people to talk about it. So, you know, at a high level, what does how to own the world mean from an investing point of view?
Yeah, because loads of people are like, this guy's like a megalomaniac. He's like some Marvel villain that wants to own the world. So all the reason it's called that is just because my basic argument is over time, if you own, it's that exposure to global growth, right? You need to own all assets in all geographies, and if you do that, so basically, you know, the really good examples of that, if Oxford and Cambridge University have billions and billions of pounds built over hundreds of years, right? Harvard and Yale University is like 4 of the smartest universities in the world. They have big investment funds, and this is how they invest, right? They own gold, they own shares, they own bonds, they have real estate, they have cash, right? And they get the right mix right. And that's so how to own the world is basically understand all of those things, understand how to get the mix right. Do it, notwithstanding that, keep it as simple as possible. You only actually really need to own 2 or 3 things, in my view, which is basically an aggressive thing, a defensive thing, and some gold to get an amazing result. And there's like 200 years of evidence that that's the case. You know, another thing a lot of people do, especially with this whole trading idea, is they massively overcomplicate things. They're like, oh, now I'm going to buy Dogecoin, or I always pronounce that wrong. I don't know.
I think it's Dogecoin.
Dogecoin. Yeah, I prefer Dogecoin.
Yeah.
You know, or they just have dozens of things they're doing all the time. It's like, no, just do a couple of things every month reliably forever, because also then the burden of hours required to get comfortable about that and sort it out and do it and set and take action is much less. It's like anything else in life. The easy
1 or 2 is easy, right?
Exactly. The more complicated you make something, the more likely you are to suffer from analysis paralysis and do nothing. Yeah. And you know, it's also a bit like you know, New Year's resolution. Right, I'm going to run every day and go to the gym 5 times a week. Like you never do. It's the same with finance. Like, oh, I'm going to learn all about everything. No, just get really simple infrastructure set up. So yes, sorry, it's basically about multi-asset investment, understanding those main financial assets.
And do you feel like your views on how to own the world has changed, or are you still back in that
a little bit in the? I think the biggest thing. So partly we were talking earlier before you click record, but like one of the privileges. So to your point about educating people, like that book's actually sold quite a lot of copies now for a finance book. Like I go to my publisher and they show me what the food books are selling, like Nigella Lawson and Jamie Oliver, and you're like, people in this country care a lot more about food than they care about investment, and it's kind of depressing.
It's easier sell.
Yeah, exactly.
But I think that's going to change over time.
I think it's great, but my point was, you know, that has sold a fair few copies, and so as a result of that, every week, almost every day, a member of the public sends me a message on LinkedIn or Facebook or email, and I get so many just lovely, lovely messages like, "Thanks so much, your book changed my life." You know, and it's cool. You know, it doesn't get old. Like still to this day, like it really. I've had a really hard week. Things aren't working out. You know, because being an entrepreneur is really tough and whatever. Or you know, the kids are being tricky or whatever. And then I'll just get an email from somebody just sending me this really heartfelt email. And the reason I mention that is because quite often they then have questions. And so over time, having literally had, I mean, it's certainly several hundred messages like that over the last decade, probably more than 1,000 actually. I haven't worked it out, but I see all the common themes and threads, the bits that people don't understand, the bits that people need to clarify, the bits that didn't necessarily, because that book's the theory. And my second book, which I'm about to publish the updated version of, is called Live on Less, Invest the Rest. Is the practice, like the practice for a British person. And so what I've been able to do is kind of wrap up all that feedback and all those questions. And one of the main things that has occurred to me over the time is, so for example, so if you own the S&P 500, which is the 500 biggest shares in America, somewhere between 50 and 70% of those companies' sort of economic value comes from outside of America.
Okay.
Or like or a bit where the FTSE is the best. So the 60 to 70% of FTSE 100 British companies earnings come from overseas.
Okay.
Because it's, you know, big British, like Shell selling oil and wherever or whatever. And so all that's meant is I've been able to make it simpler and simpler and simpler, because it's like, okay, for most people, do you know what, Occam's razor? Like the best answer is the simplest answer. It's called Occam's razor, slightly pretentious phrase. But, you know, I've been able to hone more and more into, you can get like 80 or 90% of the outcome you need by doing far fewer things. And so so you can own the world by just owning a big. So actually now my favorite index is what's called the MSCI World, or the FTSE All World.
Okay.
And so the FTSE All World you can buy in a stockbroking account, and it owns more than 4,000 companies globally. So if there's one, it's like, how do I invest? Buy the FTSE All World every month. The only thing is, which is I explain and Live and Let's Invest, the rest is, stock markets are volatile and they do crash.
Yeah.
Now, if you invest every month for 30 or 40 years, it doesn't really matter, because when there's a crash, you've been building capital for 10 years before it crashes. You're then buying it at half price. So financial assets are the only things that people psychologically want to buy more of when they're expensive.
Rather than when it's half price. Yeah.
And people don't get that, right? So the way, so everybody buys high and sells low, like and this is all the stuff you need to know, right? But if you do it over many years regularly each month, you take yourself and you do it automatically, and you ignore the news. Like I mean, like we were saying to you the other day, like 2 of the best performing years for the US stock market in the last century were 2020 and 2021.
That's true. Yes. After COVID. Yeah.
So you go into the average person in the street in 2000 when COVID, when we had lockdowns and everybody was, you know, and say, do you think the stock market's going to go up like 40+% in the next 2 years, or do you think it's going to crash? What do you reckon 99% of people will say?
It'll crash. It's going to stay down there.
And it went up. There's another thing people really don't understand is there's very little correlation between stock market performance and the real economy. Yeah. And there's very little correlation between war and political stuff, and there might be Rishi Sunak announced we've got an election yesterday, right? Yeah. I don't know. I actually haven't looked at the stock market today, but my assumption is very little has happened to
probably not
the pound or the FTSE, right? Yeah. It's much less relevant, and this is about pulling out for time frames. But the other thing we talk about is that asset allocation is equities are risky and equities do crash. So what I talk about is, and this gets more important as you get close to retirement, because if you're 30 and you've got 10 grand and the stock market crashes 50%, now you've got 5 grand. It's annoying, but it's very different to if you're 60 and you've got £1 million after a year, after a whole career of saving, investing and doing really well, and your £1 million has become 500 grand. So what we also talk about is basically there's this way of changing your asset mix to make it more defensive the older you get, which is
so less risky the older you get.
Basically, I call it 100 minus your age. And all it is like, so the amount you should have in risky stuff every month. So if you're 30, 70% should be in risky stuff, and 30% should be in like solid defensive stuff. Because you've got all that. To my point, if it doesn't really matter if 10 grand goes to 5 grand in your investment account, because you still got all these years to benefit from the returns.
20, 30 years for that to recover and compound more. So Warren Buffett, the most famous investor of history, his right hand man was called Charlie Munger, and he's got a quote which is, if you're not willing to suffer a 50% drawdown in your investments with equanimity, you don't deserve the supernormal returns that equities can deliver, right? And so that's also another thing to understand, because people might be listening and go, this guy's mad. Like, if I've got 10 grand and it goes to 5 grand, I'll be spewing. Like, it's a whole holiday. That's like 2 holidays gone. Or whatever. But that's just with the investment bit of your money. That is my point. You just do it without fail and basically leave it for as long as you can, so that it becomes 500,000, 600,000, 700,000 or even 1 point whatever million. Because at some point that will recover.
I know. Once you've got 50, 60 grand, that's the time to take a few grand out to buy a car.
So let's talk a little bit about those drawbacks because of risk, right? Because you did mention risk, which is one of the drawbacks to investing, that they say you can lose some or all of your money, right? And then again, that depends on the investment, right? What other drawbacks would you say there are to invest in?
It goes back to the psychological thing. There's the best selling finance book in the world in the last 3 or 4 years. I'm really jealous of him actually, but he's American and it's Americans can buy it. Whereas if anybody in America buys that, I'll be like, this is no use to me. It talks about ISAs. What are they, right? It's a book called The Psychology of Money by a guy called Morgan Housel. I couldn't obviously buy my book and read my book, but Morgan Housel's book it's so good because it explains that the number one factor in your success financially is your own psychology about money, is your thoughts, beliefs, habits.
Yeah.
And one of the biggest challenges, like, you know, I would contend that if you buy a large share, if you buy a whole stock market, like the whole of the American stock market, the S&P 500, or the whole of the global stock market, the FTSE all world, and you own 4,000 companies or 500 companies in the case of S&P, I mean, you know, I'm obliged by the FCA to be very careful about saying things like this, but it's very, very unlikely that's going to go to zero, unless there's a nuclear war, in which case you won't be that worried about your...
We're worried about our lives.
Yeah, you're worried about, exactly, fresh water and, you know, tinned tuna or whatever.
Yeah.
But because you're so widely diversified and you're basically owning companies from all over the world, and if you have the psychological strength to invest in that every month for many, many, many years, because you've equipped yourself with all the knowledge, the history, the evidence, you know that's got a very, very high chance of working.
Yeah.
And like the thing about compounding, the way compounding works, I mean, it's pretty obvious. Like if you've got £1,000 and you make 10%, now you've got £1,100. Woohoo! You know, if you've got 100 grand and you make 10%, now you've got 110 grand.
Yeah.
So that's why compounding is so powerful, because you don't see much at the beginning, but you know,
when you get to the bigger numbers,
numbers become much bigger numbers.
Yeah.
And so the last few, you know, Warren Buffett, I mentioned a minute ago, like multi-billionaire, he always says the main reason I'm disproportionate, he made 99% of his wealth after the age of 50.
Yeah.
Because if you've got hundreds of millions at 50, you make tens of millions every year, and the curve goes like that.
Yeah.
But what I'd encourage people to do, there's a website that's based, well, there are a number of websites, but because so often when I do these interviews or when I'm doing my own podcast, my own YouTube stuff, trolls will go, what a load of bollocks. You can't, sorry, am I allowed to swear on this? But yeah, apologies. Keep it relatively clean.
Yeah.
But, you know, what a load of nonsense. You know, this guy's full of nonsense because a few £100 every month, and, you know, that's never going to, because what they're doing is they're doing an arithmetic calculation, not a geometric calculation. And the geometric calculation takes account of percentage changes, and 60% of British people can't do that calculation, right? So they don't believe it. So what I'd encourage, if you don't understand how hundreds can become more than a million, like over time with 8, 9, 10, 11% annual returns, if that sounds like nonsense to you because you don't understand the maths, get online, type Google compound interest calculator, plug some numbers in and show yourself.
Yeah.
Because it's like, I sometimes say that understanding compounding is the single most important thing anybody will ever understand in life. Yeah. Because it's not just compounding in finance, it's compounding in life as well. Yeah. You know, gym or whatever.
Exactly. Or mindset, as you were saying. So I wanted to talk about discipline because that's very important, right? So especially in investing, where we were talking about, you know, that example of 10,000 going into 5 grand, some people might freak out and be like, you know what, I'm just going to sell my investments, right? How does somebody stay disciplined to ensure that they minimize the mistakes when it comes to investing?
Well, you know, this goes back to what I was saying a minute ago. Like, you won't do that if you've really learned this stuff. Yeah. And this is one of my frustrations. I did a YouTube video, like 7 or 8 minute YouTube video a few weeks ago called Money is a Long Form Thing. And the point I made is like, that, you know, okay, so the two big counterarguments to all of this is, one, you need to do it for 20 to 40 years. You know, most people are like, oh, okay. A lot of people just don't have the patience, right? Yeah. And the other is that, well, I used the learning how to drive analogy earlier, right? And I don't think that's a big ask. I think if you were willing to learn how to drive, or any number of other things you might have learned in your life that required a few hours to learn, you should bloody well be willing to learn this stuff because it's really life-changing. You know, a lot of people don't want to do that. But if you really understand the power of compounding, if you understand about human progress being the fundamental driver of stock market returns, and if you understand all this stuff about riding out volatility by investing each month, and if you understand what your goals are, that's why The Psychology of Money is such a good book, because it's like, you've always got to be working back from, like, why am I doing this? Because if you're right, if you've got 10 grand and now it's 5 grand because there's been a stock market crash, you're like, that's rubbish. But it's not if you've been really clear on your goals. And your goals are, no, I'm going to keep investing every month. Because, of course, the market can go back up another 100% pretty quickly, and you've continued putting money in, and you'll have 12.5 grand, reasonably quickly. But you have to equip yourself with enough knowledge and evidence and history to be really confident and to get that. And you have to be really clear about what your goals are doing and why you're doing it. And it is, front and center, it is to have a much better life. It's if you can be patient, if you can be disciplined, if you can learn, like I say, enough, and it's not a degree. I'll tell you what is a degree's worth of knowledge: becoming a good trader.
Yes.
This is the irony, right? Is that everyone's like, oh, I can't be asked to learn how to be a good investor. It's too much. It's boring. Pensions, ISAs, equities. Well, can't be bothered to do that. But I'm going to be a trader instead. Well, let me tell you, having worked on huge trading floors and dealt with multi-billion-dollar hedge funds for a long time, becoming a really good trader. If you're trading against those people, by the way.
Yeah.
And
exactly.
and statistically, between 70 and 90% of normal people lose money if they trade over time, right? Even if they're lucky, and even if you're making them, because the other thing is you only sing when you're winning.
Yeah.
It's amazing how everyone in the Bitcoin world goes crazy when Bitcoin's price is up and like, oh, I've made so much money in crypto. And there's a deafening silence on Facebook and, when it's down, right? And I'm genuinely not just slagging off crypto. It has its place, but it's really important that, be willing to do the tens of hours required to understand this stuff, get confident about this stuff, about investing.
And then move into that maybe later. Have the core
exactly.
of this. Start with the actual base, like have your base.
And it's much less work than becoming an effective, safe trader, right? Yeah. Which I would argue, to do it really well, it's at least an A-level, and it's possibly a degree's worth of knowledge before you're really good and you can really trade really well. And that's a big thing. But the other analogy I use is like, okay, so you're 26, you reckon you can invest a few £100. You've realized that finance is something I need to sort out, right? And then the first thing you do is go to trading crypto. Like you don't learn about ISAs or pensions or shares, or you just like, no, that's a new world, man. I'm 26. Yeah. You go straight to trading crypto. And for me, that's like, so you actually right now are a white belt, like, because you just only started saying, yes, I'm going to learn about finance. You are a white belt. To move up to the yellow belt level is learning about ISAs and pensions. If you want to trade crypto, that's black belt level, right? And guess what happens when white belts fight black belts? They get hurt. Yeah, they get hurt. And I don't think enough people are. The reason nobody's telling this story on social media is because I can tell you from personal experience, it's a lot easier to make money promoting stuff which people think can make them super normal returns than is to make money being like me and going, it's going to take you 20 years. Yeah,
right? That's just life, right? That's just how it is. If you're honest with people, they're going to be like, no, but
but that, it's a much less compelling argument, but I kind of don't care because we're very mission driven. And, the outcome I want is nothing less than a much better Britain. Like if I catch fire a bit, because I'm doing some stuff with some very big companies, which might put me in front of really big audiences in the relatively near future and with my next book and stuff. If we could almost single-handedly get, a few million more British adults to do this, within 10 years, Britain would be a much better, fairer, wealthier country. Like, and I just genuinely believe that. Like, way, way more than any government policy. Like, genuinely.
Okay, that's an interesting statement.
That's what I believe.
Okay, so this next question for you, right? Do you think that everyone should invest, or do you need to be in a good financial position too? Because there might be some people listening thinking that about their situation.
So I get this email all the time, like, loved your book. My wife and I want to, we're wondering whether it's a good time to invest or not because of Trump or Brexit or whatever, right? So firstly, the right time to invest is always right now. Right now, every month for the rest of your life. Don't think about, Israel or Trump or complete irrelevant noise, right? In terms of your personal circumstances, about like, if you can afford to get 25 quid a month to work, do it. And put it on autopilot, by direct debit. Yeah. you know, even if, by the way, if you're scared of the stock market, just make sure it's in cash. You know, but start in cash and then try and learn enough so that you get comfortable and you're like, actually, no, I know how to do this, right? Because the reason I say 25 quid a month is most of the big investment platforms allow you to start with 25 quid a month. And there are kind of robo-advisory ones where you can do a quid a month. The problem with that is the percentage of what you're doing that gets eaten up in fees is really high. So I'm like, kind of just go for one of the big platforms and start with 25. But 25 is absolutely worth doing. And, you know, so if you're, the average British salary is about 30 grand. In London, it's about 50 grand. But just take the average 30 grand. 10% of that income post-tax is 250 quid a month. So actually, people on an average salary could potentially, and then I get all this pushback. Actually, I got pushback from a trader I was speaking to the other night about this, saying, "Oh, you have no idea how many people in this country. There's no way they can save and invest 10%." I'm like, without wanting to sound harsh, if you really interrogate, and I have to do this too, right? But if you really interrogate, like, how much have you spent on tattoos or gym kits or your football season ticket or, you know, Deliveroo or Ubers or like, if you can't find 25 quid a month, like if you have a job and you can't find 25 quid a month, I think you're doing something wrong. And what happens then is, as I said, is it's that habit in psychology is that 25 quid a month is not going to make you a millionaire. Let's be clear. Because I was having this discussion on the Meaningful Money podcast a little while ago, and one of the trolls was like, what a load of, 25 quid a month. It's like, no, it's not. But what it is going to do is show you in your early 20s what can happen to that. And I've got a few hundred quid. Yeah. That's nice. And that's a life-changing, that's like literally, the trajectory of an aeroplane that leaves Heathrow Airport and goes 1 degree that way. You know, by the time that's the difference between like Buenos Aires and Perth or Sydney, right? over thousands of miles. And it's the same with this one decision. Like if you save and invest automatically every month by direct debit and get into that habit, that is potentially going to make, but your 45-year-old or 55-year-old self is going to thank you, because the likelihood you are then in a completely different place to never starting that habit is massive. Yeah. And all the evidence, there's a lot of evidence that that's true.
So actually, let's dovetail onto the next question, because on your website, you stated that that you believe that people with low incomes who understand the financial markets can become millionaires. Can you expand on that?
Yeah. So it's the irrefutable mathematics of compounding. And when I say low income, so let's be clear, I'm using the average British income, right? But it's not. So there's this amazing stat, because you looked at this too. So what I also say is 70% of lottery winners are bankrupt within 5 years of winning millions of pounds or dollars. That's nuts. I mean, something like 150 professional footballers are in prison because after they left the amazing earnings of 20, 30, 50 grand a week playing football when they were 32 or 33 and they didn't make the cut anymore, the only way they could sustain that was by doing some sort of criminal activity. 80% of NFL and NBA players are bankrupt within 5 years of earning millions of dollars. And the point I'm trying to make is, like, it's such a tragedy because these people need a little bit of information for that to never happen. Do you ever watch the series Ballers?
No, I haven't watched that.
It's Dwayne Johnson, The Rock. It's brilliant. It's about American football, and he's like an ex-American football player that's in really real financial trouble, and he basically is on a mission to make sure all the guys who are 10 years younger than him that are all still playing in the NFL don't make the same mistakes as him, so he becomes a financial advisor. It's a cool show. Yes. It's good fun. But so basically, having a really high income but having rubbish habits and no knowledge about financial market investment means you have a very high chance of being bankrupt. Loads of celebrities are bankrupt. Like I did Kerry Katona and all the whole of the band Blue, they're all bankrupt. Michael Barrymore was bankrupt. I mean, it's just, the list goes on and on. Karen Millen, because they never learn. Like, don't want to go on about my book, but if any of them had read that book, they wouldn't have gone bankrupt, like genuinely. And at the other end of the scale, the maths, I've shown the maths in tables in there, but basically, if you're on an average British salary and you can say and invest 10% a month of your income, and you make stock market returns, which is roughly 10%, you'll have £1 million.
Wow.
but crucially, over 40 years.
Over 40 years. Yeah. And that's the impact of, compounding and time on your investments. Exactly. And that's, like you say, that was 250? pounds.
Yeah,
a
the
month?
table's actually in there, but it's off the top of my head. It was an assumption. It was basically like 10% of an average British salary after tax is 250 quid.
Yeah.
If you can manage to get 250 quid to work every month, ignore just buy every month without fail into stock market investments, and you make the stock market return of the last century. But basically, stock market returns are anywhere between 8 and 12%, depending on how lucky you are. At the moment, they're more like 14%. Like the US stock market's done so well in the last 10 years, which probably means it's going to go down.
Yeah.
But that doesn't matter for you or me if we buy it every month from now on, because 20 years from now, it'll be way, way back up because of all the biotech stuff and whatever else. So, and you'll have bought it cheaper if you're buying it every month, right? So, what you want to do is by investing every month regularly without fail and ignoring the news, your returns trend towards long run returns. Yeah. Because just to unpack that a bit, what most people do is they go, I'm going to do stock market investment. They invest a bit, they panic, Israel's kicking off. I'm scared about this. They sell out. And so the stock market's return is 10%. The average investor's return is 5%.
Right. Oh, wow. Okay.
And that's front and center.
Wow.
Because they're just coming in, they're buying high, they're selling low, they're panicking, they're not doing what I'm saying. And who else is saying what I'm saying? Warren Buffett. If you study the smartest, most successful investors of history, a lot of them will say, the minute you can start saving and investing, put it in the stock market every month until you've got enough money to retire. Full stop. Yeah. That's it. I think you need to be a bit careful of that, because if you're very wealthy, so I call that the market purist approach. Yeah. So very wealthy people say that because, like, if you've got £10 million and the stock market falls 50% and your money's 100% in the stock market, you still got £5 million. You can still go to the grocery shop. You can still pay your rent, because, if even somebody with £1 million experiences a 50% fall in the stock market, now they've got $500,000 and they just want to retire. Yeah, that's catastrophic. So I think if you're super diligent and you're quite a high earner, and you start in your 20s, you could just own the stock market because you'll have millions of pounds. And then you're fine, because like I just said, if you go from 10 million to 5 million, next year it'll be back to 7 million. Doesn't matter. But for most like mortals, you need to layer a bit more complexity on, which is basically being really clear on how volatility works and how you change the investor mix. Because obviously cash doesn't crash. So, and bonds behave differently so that's the bit to, and gold behaves differently to the stock market. So that's why it's called How to Own the World. You just need to understand how to use the mix.
How to change it as you get older.
Exactly.
Yeah, that makes sense.
Which is not complicated.
Yeah.
Again, well, I've tried. So I'm just about to update Live on Less, Invest the Rest, which basically unpacks this whole idea of 100 minus your age. Yeah. If you're 30, you're like 70% risky, 30% defensive. If you're 70, you're 30% risky and 70% defensive, for the reason I just said, right? Because there's nothing worse than me. God, it's so tragic seeing a 60-year-old who's just worked like a horse their whole life with a really bad financial advisor who doesn't know this stuff.
Taking the fees out.
And they're like,
stuff, and
I had 100 grand in 2000. I had £1 million in 2008. Yeah. And I trusted my financial advisor, and by the end of 2008, I had 550 grand. Yeah. Like, can you imagine how painful that is? Like,
very painful. Yeah.
There are ways of making sure that doesn't happen. I can't remember what your original question is.
No, it was about like the statement that you made of low incomes, which you answered can become millionaires through it. And to me, that sounds like, because a lot of people say, okay, well, 40 years is a long time. I don't want to become a millionaire in a long time. But I'm also thinking on the other side, that's doable. 250 is doable. As your salary increases, you can maybe, if you want to, 100%. You can increase more. And then actually that 20, 30 years comes a little bit quicker. So I think that's the other thing that people don't think about. They just think about, actually, your earnings are going to increase. So you 100%. Can actually invest more. So actually that time frame goes down. Or actually, if you're okay with that time frame and you're saying you just want to enjoy your life, you can still enjoy your life.
Exactly.
Your earnings increase, and
the other point to make is,
happens
I often make is a couple of whatever kind of couple you want to talk about, married couple or not, but a lot of people couple up in life, right? And if you do it together, 250 quid each, it gets to you to really big numbers, right? Because you're basically doubling the outcome and you're compounding. So, or couples who are on who's struggling a bit, put 125 each and you get to 250, and that's still the trajectory. So doing it as a team, because if you both do it and you're both on the same page and you've discussed it, that can be really powerful. But yeah, you're right. But that goes back to my point earlier about like, if you start on the journey and you automate it and you know all this stuff, so you have confidence. You know, most people don't know this point about ignoring the news.
Yeah.
Most people are like, oh, I'm going to get into investment. I'm going to watch the news. I'm going to open the Financial Times website every day. Totally the wrong thing to do.
Yeah. So let's talk about long-term wealth. Why do you think it's important to build wealth over the long term?
Well, the most important, like I said earlier, let's talk about the stick, not the carrot. The most important thing now is if you don't, you're going to be properly grindingly poor because of the demographic problems we have in the West. I mean, America, most big Western countries are on the verge of bankruptcy.
Yeah.
That's why we have a cost of living crisis, because the only way governments can pay people pensions and pay for the healthcare and everything else is by printing money out of thin air. That creates inflation. And John Maynard Keynes, who is the most famous economist of the 20th century, said, not one man in a million understands inflation, which is probably about right. It's like, that doesn't actually mean that only like 65 people in this country understand inflation. I'm definitely one of them. I suspect there are more than 65. But, you know, the point's made. And like this, as the government prints money out of thin air to try and give people because a government that stands up and says we can't afford to pay you a pension, like they've got a very short lifespan as the government, right?
Yeah.
But if they stand up and say we're taking steps to alleviate the challenges of COVID and the pension crisis by doing a quantitative easing program of £350 million, 99% of people have no understanding of how that works mechanically to make their pension much less.
Yeah.
But it does. It's the same. It's the same thing. It's just dishonest, right?
Yeah.
And because
they know we don't know.
Yeah, correct.
They know we don't know.
But your antidote to that is understand
it. Yeah.
And because the really tragic thing is, I said to you, I can't remember if we were recording when we said this earlier, but like, so most people in that predicament, my pension's rubbish and non-existent. I'm really struggling. All my groceries are up 30%, like pasta and bread and everything, milk, eggs. Cost of living crisis. What do? They clamour for more government intervention, more money printing, which is basically like throwing fuel on the fire of the problem. And the problem is, not one man in a million understands inflation. Most people don't understand these mechanisms. They don't understand how the bond market and the gilt market relates to inflation or how QE works or anything. So they're like, the government should do this, the government should do that. Well, I sound like a really right-wing libertarian. I kind of am, because I think the less government there is, the more people do stuff and the private sector do stuff, the better the society is, because it's based on merit. But that's just a view. But what is true is if you want more inflation and an even worse cost of living crisis, then have the government do more. Like, genuinely, that's how it works.
Okay. That's interesting. That's interesting. So I wanted to learn, because obviously it seems like you studied a lot of, investors, right? So from the best investors you studied, what have they done well and what mistakes did they make?
Well, it's really interesting, right? Because Warren Buffett is, one of the best investors in history. And he says most people should just buy the market.
Yes, he does say that.
And so does a guy called Ed Van Thorpe, who's worth about $1 billion. And so, so like all the very smartest, most successful investors are telling us, because actually a lot of the really, really smart investors who are smart for a little while then aren't. It's very rare to consistently continue to outperform and make supernormal returns for like years. So a really famous example of that at the moment is a woman called Cathie Wood, who has this thing called the ARK Fund. So in the tech boom, and she was like, "Oh, Cathie Wood, she's made 60% a year," and now she's like underperformed. You would have been better off just investing in the stock market, not a clever Cathie Wood. And maybe she'll bounce back, and that will change. But there are. I think this goes back to the psychology of money point. If you're willing, if you just want to do the learning how to drive and then sorting it out bit. The relatively fastest route from A to B just make a big difference to your life. Occam's razor, 80-20 rule, 80% of the outcome from 20% of your effort, right? You don't really want to think about how the very best investors in the world who've made amazing returns have done it, because every single one of them will tell you, if you want to do what I've done, that's like a PhD. That's like 25, 30 years of learning about capital markets and how do you value shares. And this is another thing. So in that book, I talk about keeping things simple and taking things further. Yeah. And basically, most people want to keep things simple, because taking things further, it's at least a degrees. If you want to, it drives me nuts. Lots of people, when they get into finance, are making single stock investments. They're like, oh, I'm going to buy some Tesla. I'm going to buy some Apple. I've got a section in my second book. It's like 17 things you need to know before you make a single share investment. What is a PE ratio? What's the return on capital employed? What's the cash return on? What's the earnings yield? What are the exogenous factors that might influence it? What are the hedge funds doing? Are they shorting the stock? Like most investors with single stock investments literally don't know 99% of the things they should know before they make a single stock investment, and they're making single stock investments. And that's another like road to ruin, right? But you don't need to. You can just own the market. You can own 500 companies.
Keep it simple for yourself,
exactly.
Right? Yeah.
But, so the simple answer is, the best investors, what I've learned from them is, I think I can make single stock investments, but I would still go very carefully, and I still only do that with a certain percentage of my wealth. But I've been looking at capital markets for 25 years and did economics at university. I think most people shouldn't and can't. And that's what most of the smart investors will tell you.
Okay, cool. I love that. So let's talk about how can people invest today? What's a simple way for people to start their investment journey today?
Knowledge is the first step, right? And it's a marathon, not a sprint. And we've consistently said it's 20 to 40 years. It's not something you do for a few weeks or a few months or even a few years and stop. That's just a waste of time, right? Well, it's probably not. It'll probably give you a better outcome in 10 months' time, maybe. But the first thing is knowledge. Is you've got to get comfortable. Like it's like the old teach a man to fish thing, right? The proverb, like if you teach a man to fish, he can feed himself every day. If you catch a man to fish, he can feed himself this evening. Basically, if you can get to a point where you understand what are shares, what are bonds, what is cash as an investment, how does property work, and commodities. And because precious metals are a special case, basically, gold plays a really important function in the financial system, and I think it's important to understand that. But you don't have to begin with. I mean, if you understand shares and sort of cash and bonds, that's probably enough. And property, by the way, just as a quick comment on property, most people shouldn't make any more property investments because they've already got a massive property investment if they own their own home or flat or whatever. So property again, you can kind of drop it for the 10% of your income every month. But then you need to understand what is a pension and what is an ISA. You need to figure out how to save and invest, ideally 10% or more of what you earn every month without fail by figuring out how to spend 90%.
Yeah.
So psychologists call that reframing. People are like, well, that's just nonsense. That doesn't work. It does work. So here's an example of why it works. If you need a life-saving surgical procedure and the doctor sits across from the table from you before you agree to have the procedure and says, you have a 90% chance of surviving this operation, what's your decision going to be?
You got to do it.
Probably do it, right? What about if he sits across the table from you, he or she sits across the table from you and says, by the way, if you do this operation, you have a 10% chance of dying.
Yeah, you might. It's negative, right?
Right?
Yeah,
but the probabilities are exactly the same.
Yeah.
And it's really interesting. This stuff's all in the psychology of money, actually.
Yeah.
It's like, if you sit down and work out how to spend with joy, like, I'm going to allow myself to spend 90% of everything I earn every month on the stuff I love, on Netflix, on, restaurant meals with my boyfriend or girlfriend or whatever, on all the stuff I love, on sports, whatever. And then have 10% left to invest. That is psychologically completely different from going, oh, how am I going to find 10%? And it actually works for most people, not for everyone. Yeah. And the other thing is, if you can't do this at 21 or 22, just keep thinking about it. And if you can do it when you're 25 or 26, start it then. I mean, I always talk about 25 to 65 because
that's a good point to start.
Yeah. If as long as you basically get going in your sort of mid 20s and keep doing it until your mid 60s, you've got a really good chance of having a life changing. But the other thing is, without wanting to be too like hair shirt, like your life will be rubbish and you won't be able to have any fun until you're 65 and then you'll be a multimillionaire. It's actually not like that either. It's because along the way, you will probably be in a better position when you want to buy a car. You will be in a better position if you want to go on holiday. You'll be
true
because after a few, nobody's going to keep 100% of their savings and investments just there and not touch it for 40 years, right? I mean, if you can, that's amazing.
Yeah.
Because if you're a very high earner, if you're lucky enough that you do, I saw some of your former guests talking about earning over 100 grand a year. If you're in that sort of category, you should be able to have a certain amount of your savings that you don't touch at all, ever, because you've got enough free cash flow in your monthly salary, right? And that's the best way. But, if you're like a normal mortal on 45 or 55 grand or whatever you might be on, you can still take only, like you got a big ISA account and it's now got 11.5 grand in it.
That's
Okay,
enough
so
for
go.
whatever you
Yeah,
need
so
to
go
do,
on
right?
1,500 quid, lovely weekend break
Mhm.
as a special treat for Valentine's, or you know, because you've got 11.5 grand, you're not putting on a credit card and paying 24.9% APR on it, right?
Yeah,
So
true.
the other thing, so I haven't had contents insurance for 20 years, right?
Mhm.
A lot of people pay 100 quid a month for contents or whatever. Because once you've been doing this for a few years, you don't need contents insurance anymore.
Fair enough.
If somebody nicks
Fair
your laptop,
enough. Yeah.
so the 100 quid a month that you were
Yeah.
paying for contents insurance, which by the way is 1,200 quid a year, so over 10 years that's 12 grand over 20,
You
right?
can invest it. Yeah.
Right?
That's a good point. Yeah.
So all that, so you don't need any of these things, and all that money goes into the pot and grows the pot. And touch wood, I'm not going to give my address away, but in 20 years, I've never needed contents insurance.
Mhm.
So that's like, I mean, literally, what is that? That's it's 20,000 quid or more that's now in my ISA accounts that's not in the pockets of an insurance company.
Yeah. Wow. I love that. So when we talk about obviously simple way, right? There's obviously investment platforms, and then you already mentioned an ideal investment to invest in the whole, global companies, right? Or companies across the globe, should I say? So you said the FTSE All World. That's kind of what it's kind of called, right? Or I think there's a few other alternatives to that.
So basically, so the FTSE and the MSCI are just companies. So FTSE is obviously Financial Times, MSCI is Morgan Stanley Capital.
Yeah.
I forget what the I stands for.
Are those index funds or are those ETFs?
So they are exactly. So they are indices.
Yeah.
The MSCI World Index is like 1,600 companies, developing world.
Yeah.
The MSCI All Country World, I've just touched the microphone, is like, off the top of my head, 3,100 companies. And that includes like India and China. And so it includes the developing world. And the FTSE All Country or all world is 4,100 companies, which includes even more markets.
Okay.
So there's a distinguished, again, this is all stuff people need to learn. What is an index? What is the FTSE 100? What the hell does FTSE 100 mean? What is it? All it is the 100 biggest stock market listed companies in the country.
Yeah.
So once you know what an index is, which is just a way that stock market companies cut how you define the companies in an economy, right? So in America, it's the S&P 500. It's the 500 biggest companies. In France, it's the CAC 40. It's the 40 biggest companies. And, same in Tokyo and whatever. But once you have an index, the next thing is to your question, and you need to understand that the way you buy an index or invest in that index is with a thing called an ETF, an exchange traded fund, which basically there is an ETF that you can put 25 quid a month into or 100 quid a month into or whatever of all of those things. There's over 1 million ETFs.
Yeah.
Amazingly.
Wow. That's incredible.
You can buy like a small cap Peruvian Islamic equity fund.
Wow.
I mean,
There's so
I think
many.
that literally exists.
Yeah.
But again, the trouble with that is, so you could wake up tomorrow and go Mongolian property, or like uranium, and there'll be a way. Like 100 years ago, nobody could do that.
Yeah.
Nobody could monetize.
Yeah.
Like, Brazilian soybeans, that's a huge growth market.
Mm-hmm.
I'm going to own a company that owns Brazilian. Like, this is so powerful, right? And it's another point I make is that financial services and products are the best they've ever been. Everyone's like, bankers,
so much
greedy
more
bankers.
accessible. Yeah.
But what have greedy bankers given the world in the last 100 years? They've given them way more powerful technology for investing than anybody had for the whole of the history. There are still some nasty, greedy bankers, but the industry has actually created a lot of good and innovation. It's just that too few people are taking advantage of that, as ever. But I guess my point is, with over 1 million ETFs, the key thing is 80-20 rule, Occam's razor. Like, I think that I think that one of the MSCI World or FTSE All World's the best because America's had like 50 years of American exceptionalism, and all the big companies come out of America. Except in recent years, there's like Taiwan Semiconductor in Taiwan, which is a huge company. There's Novo Nordisk, which is the biggest diabetes company in the world, and weight loss company. Weight loss that all the celebrities are taking Ozempic.
Yeah. I keep on hearing that.
I was. When I first started studying Novo Nordisk, when I was working for a Swedish investment bank, off the top of my head, I think it was valued at $20 billion. It's now valued at $350 billion.
Wow.
It's a pretty good investment.
Our
right?
investment.
So my point is exactly, but my point is it's a Danish company. And some of the amazing world-changing companies of the future could come out of, very likely to come out of India. India's got Reliant Technologies. It's got some, or Australia or China or Latin America or, Kenya. I mean, the Nairobi stock market's been on fire, and Nigeria and all these other places. So to have a more global access than just the 500 American companies, I think could be a good, but that's not financial advice, right? It's just...
Yeah, exactly. You're not allowed to. Yeah.
Exactly.
So it's like, I understand why you're saying that, because even as, like you say, a lot of people that might not even have the appetite to learn about investing, it might take them a little bit of time, and actually also they can have access to as many companies globally as possible. So they're just taking advantage of the different growth stories that are happening across the world, right?
That's how you buy a proxy on human progress.
Yeah, exactly.
Which I believe that is investing.
Yeah.
I mean, it sounds a bit spurious, but if you think about toilet roll in the supermarket or in how did toilet roll get to you? There's this unbelievable infrastructure of like companies in Finland and Sweden that are chopping down fir trees and pulping them, and then like huge warehouses and forklift trucks and big trucks and shipping containers. Just think of that one product. It's a bit of a weird example, right? But the fact that industry has grown, kids' nappies. People didn't have nappies 50 years ago. Or, when you walk into Boots or Sainsbury's or whatever, just stop for a moment and look at what there is there, right? Every single one of those things existing, a lot of them didn't exist 20 years ago, or 10 years ago, right? Vapes, let's say, or whatever, like. Every single one of those things existing, and so much else besides, aeroplanes and buildings, and is real wealth. And that's the bit that people don't understand investment. Like, investment is about having a financial exposure into that real wealth, in the same way that the English and Dutch gents in the city in 1700 invested in like sending ships around the world to discover America and whatever else, right? And they had upside in the real wealth that came back. Whatever that was, and nothing's changed except there's way more real wealth. There's a much wider range of activities. The other thing is, most of the corporate actors who you can invest in today are much better companies. They're better for, like, most people working for pharmaceutical companies actually care about patients. I know that firsthand, having worked with them. Most people working for big oil and gas companies actually are worried about the impacts of oil and gas. A lot of people working for tobacco companies are screwed anyway, because their product's going to kill you, and they're just going to have to pretend that. But anyway, I'm rambling, but hopefully that vaguely answers the question.
No, that makes sense. So you've got your new book launching on the 29th of August. Our Future is Biotech. Can you give us a sneak peek on what we can learn from that book?
So Our Future is Biotech is, I just spent 8 years trying to raise money for biotech companies. And the basic insight is that the last century's been about tech. Smartphones and the internet and TV and aviation, but the majority of the wealth creation. I mean, just look at the biggest companies in the world: Google, Amazon, Facebook, Tesla, Nvidia, whatever. And I just believe, from my own personal experience, the next century will be about biology or biotech. And the reason for that is very simply because you create real wealth by solving human problems. That creates value. So curing cancer is a big one, helping with dementia or elderly care, or really importantly, rolling back environmental degradation. So like all the heavy metals that are leached into our soils, going back to our farmland and sorting it out, going in, revolutionizing agriculture so we could rewild like 90% of the Amazon. That's actually that's something that could actually happen. And so I think that biotech is going to be where a lot of the value is created in the next century and in our lifetimes. And so, I had to write a book about it, explaining why that is and why I believe in it and why I think it's really... So biotech's averaged 14 and a bit % per annum in sterling terms, the American biotech industry since 2000. That's the return that you... 14% per annum. Okay, it's been volatile, so you wanted to buy it every month regularly, not one day, and then it'll be down 30%. But I think there are certain things that give you a chance of making like low to mid-teens annual returns. They're riskier, they're more specialist, and I just think biotech's one of them. So I've written a book about it, basically. Okay, I love that, Andrew. It's been such a great conversation with you. Like, I really enjoyed this conversation. I think it's going to be very educational for the people that have listened to this, and the importance. You really stress the point of the importance of investing. And I like your definition of investing is on world progress, which actually, when you put it like that, that is true, right? We are investing in our futures. We're investing in the betterment of, of our human lives, right? Which is, it's very philosophical. but it's what it is. And I think it helps people to sort of see the wood for the trees. Like, and trading isn't.
Yeah.
Trading is like, I'm going to win, somebody else is going to lose. By the way, most of the time, the person who wins is some hedge fund in Chicago or New York or Singapore, not you, like genuinely on over many years of doing it.
Yeah.
And whereas investing is not that.
Yeah.
And very few people understand that fundamental difference. So, and massive thanks, by the way. It has been a lovely conversation.
Thank you so much. So where can people find you, obviously, if they want to, you know, learn more about what you do with Plain English Finance? I'm sure that there's going to be a lot of questions and people are going to want to further their learning, understanding.
Love to hear questions. So my website is plainenglishfinance.com or plainenglishfinance.co.uk. They both work.
Yeah.
And you can email me. It's like hello@plainenglishfinance.com or andrew.craig@plainenglishfinance.com if you want. But that's all, like, you can find it all online. What I'm really excited about is we only actually launched it in November. We have a YouTube channel now, and I've done 14 videos. So I'm doing a video every fortnight, and they're like 5 to 20 minute tutorial videos, which is just it's me talking to camera, which people might find very boring. But it's basically, and I'm literally about to kick off a free course in financial freedom, basically.
Oh, I love
so it's
that.
going to be
Wow.
and it's like, you know, next week we're going to start with what is a share, what is the stock market, and then we're going to go through what is a bond, and it's literally what we're trying to do between now. Oh, I've got cramp in my leg. Comedy. What we're trying to do between now and probably Christmas is, by the time, or maybe, I don't know, October or November, we'll see how, because it's like that point I made earlier about money as a long form thing.
Yeah.
It's going to be a few hours of content, but it will be answering all these questions in a really specific, granular, like, this is what you need to know and this is what you need to do.
Yeah.
So go to a Plain English Finance YouTube channel.
Yeah, I love that. Financial freedom, and it's very important, and, you know, you can do that by investing, right?
Yeah, well, it's the only way. It's the only way you can do it.
Right? So,
you know,
people, you've heard this, right? You've got to, you know, take care of your financial literacy. There's no excuse. If you're listening to this episode, then, you know, we're speaking about how important it is and how important it is for your life. And I also appreciate the fact that you mentioned goals, because at the end of the day, we all have our personal goals.
Yeah.
Is your personal goal financial freedom? Is your personal goal to buy a really big house somewhere? Is your personal goal to retire? I don't know, wherever, right? And you can do all of those things through investing.
That's it. But I think the most important personal goal for everyone, though, today in this country is to not be poor.
Yes.
And because like the whole everything else, I like a Buddhist monk. Or if you ask most people, are Buddhist monks happy? What's the answer? Most people say, yeah. Like most Buddhist monks are sort of enlightened, happy people. What do they have economically? Literally nothing. Nothing. They have an orange robe and a wooden bowl. That's all, and chopsticks, right? And I always like to go back philosophically to, like, everything else over and above food, water, shelter, and the love of your loved ones is a bonus. And I think there's another thing we lost sight of. But if you want the bonus, investment will give it to you.
Okay.
And it will give you the warmth and shelter and food as well, which is really important. Right?
Okay, so do you have any final words for the watchers and listeners? It's been such a great conversation.
Well, I want to say thank you very much. No, I think I just feel like we've run for quite a long time. Nobody's going to watch this bit, by the way. But no, it's been amazing. I really appreciate the work you do. I think it's really important. You know, you are one of a new breed of podcasters that, you know, together we need to make this difference. So it's been a real honor to be here. Thank you.
Thank you so much, Andrew. Thanks so much for tuning into this episode of podcast, and we'll see you next week's episode.